Hi, everyone. Welcome and thank you for joining day 2 of Brexit Bootcamp. If you joined yesterday, welcome back. And if today is your first day joining us, hello, welcome. My name is Alex Wyatt from simplyvat.com, and I'll be hosting your workout over the next few days. So yesterday we started off with a few technical difficulties. So for that, I just wanted to apologize and thank you for your patience. We will be sending out the recordings and slides later today. So check out in your inbox for that. And you'll also be receiving today's recordings and slides tomorrow. So everything will just be coming the one day late. We are now well underway into Brexit Bootcamp. So today we are covering VAT for both physical goods and digital services and products. We still have 2 more days left. So tomorrow you can sign up to learn about entering into new markets, diversifying your sales channels, and ultimately creating an opportunity out of Brexit. To end the bootcamp, we have a panel discussion with 4 seasoned sellers talking to you about preparing for Q4 and Brexit. So it's kind of like a mini mastermind held all online. And if you guys want to sign up to these next 2 sessions, you can sign up again in the link in the description on the YouTube channel. So as these sessions are all about answering your questions live, if you're watching live, please join the YouTube live page where you can pop your questions into the chat box. If you are watching from the Eventbrite page, please click on the link just below the YouTube video that says connect and ask your questions live. You'll be brought into YouTube and you can ask your questions there. If that link isn't working, you can also check the email that we sent you where you can have a link directly into YouTube. Whilst we're waiting, if you can pop a few hellos into the chat box to test and make sure that it works, and say hello to today's instructor, Louise. So I'll just wait for a few people to comment on in here. If you can, if you're in the live stream, please pop a little chat so I know that it's working. Otherwise, we will begin and we will introduce Louise. So hello, Louise, welcome.
Hi, Alex, how are you?
Good, hello, good. I can see that there's loads of people showing up today. So we have, hello, Corey's back from yesterday. Good to see you. Sophie, hi, Sophie. Awesome, Jeremy, thanks for joining. So we just wanted to give a little introduction into Louise here. So I've had the pleasure of working with Louise for a while now. She is a VAT researcher here at simplyvat.com. She's responsible for keeping on top of the latest VAT legislative developments in the EU and UK, including how Brexit is going to impact businesses. So we have Louise. It's so great for you to be joining us today. I know you have prepared a great presentation for us. So without further ado, I will share your screen here and I will leave you to present.
Perfect. Thanks, Alex. Okay, so let's just start. So today's presentation is all about getting you VAT fighting fit, ready for Brexit for the end of the transition period. So as Alex mentioned, I am the VAT researcher at simplyvat.com, and I'm responsible for researching all the latest changes with regards to Brexit, but also the latest VAT legislation updates in the EU. So let's see. Okay, so I just wanted to start today's presentation with the latest on Brexit. What is going on with Brexit? What's the latest update on that? So as you probably know, the UK, has left the EU officially on the 31st of January 2020. So since that date, the UK has currently entered a transition period, and there is no changes applicable to and in the UK at the moment until the end of this transition period. And that means that EU law is still applicable to and in the UK until the end of the transition period. So the transition period is currently set on the 31st of December 2020, so only a few months to go. And from that day, the UK will officially no longer be part of the EU single market and customs union. So we'll be exiting the customs union, and that's going to bring major changes in the way UK businesses, but also EU businesses trade with each other from that day. You may be aware as well that currently there's a lot of talks about agreements and free trade agreements on the news. So what is going on is that the UK is currently negotiating a free trade agreement with the EU. The deadline for this is the 15th of October, if I'm correct, and it's basically the last date that a free trade agreement could be ratified between both parties. And why is it important? If there is no free trade agreement ratified by the end of this year, from the 1st of January 2021, trading between the UK and the EU will go back to very basic World Trade Organization trading rules, with potential quotas, but also tariffs applicable. So what is going to change from that date? So from the 1st of January 2021, EU VAT rules will no longer be applicable to and in the UK. We will see later further on that there is one exception to this with Northern Ireland, but we'll come back to this in a bit. Even though a free trade agreement is ratified between the UK and the EU, goods will be subject to checks at the border, and they won't be able to flow as freely as they have when the UK was part of the single market and the customs union. So basically, one of the major changes is that the movement of goods between the UK and the EU will be treated as imports and exports from the 1st of January 2021, whereas they are currently treated as intra-community movement of goods, such as acquisitions, for example. So that means that the goods moving across the border will be subject to import VAT and customs procedures as well. Another major change for e-commerce sellers is that the distance selling rules, as we currently know them, will no longer apply to e-commerce between the UK and the EU. And again, this is a direct consequence of the fact that the UK will no longer be part of the single market. So therefore, e-commerce transactions will be treated as imports and exports as well. Another major change, which has been announced by Amazon as well, is that the UK will no longer be part of the current EFN or FBA programs as we know them. And you may have heard of this already. Amazon has confirmed that they will no longer be moving goods from a UK address to other fulfillment centers in the EU. So other changes. So again, what is all this bringing? So acquisition tax, as we currently know it, when trading from the between the UK and the EU will no longer be existing. Instead, we will see import VAT. And again, this is a consequence because transactions will be treated as imports and exports. So import VAT will be applicable to goods arriving in the UK from the EU and vice versa. Import VAT is usually payable upfront, so at the border, and this is quite a major change because of course it will impact cash flows in a lot of cases. So it's definitely something to look into as a business. Some EU member states actually offer deferment schemes so that the import VAT can be accounted for in your VAT return instead of at the border. So instead of when you are importing the goods physically. So that could be quite interesting for cash flow. And in fact, the UK will be offering postponed VAT accounting to UK VAT registered businesses. So that ultimately it means that when importing into the UK, you will be able, if you are VAT registered, you will be able to account for the import VAT in your VAT return instead of at the point of import. And again, that will be really interesting for cash flow reasons. So I just wanted to cover a few tips, and one of the main considerations that as a business you should be thinking about ahead of the end of the transition period. So we are going to be looking at what you need to do as a trader, as a seller, to prepare for the end of the transition period. So if we start with e-commerce distance sales, so B2C cross-border supplies, distance sales from one country to another. So as we said a minute ago, the VAT distance selling rules, which we currently know across the EU, will no longer apply between the UK and the EU after the end of the transition period. So currently you might be calculating your turnover when you are selling into an EU member state, because if you breach a certain threshold, a local threshold, you would be liable to register locally. Under that threshold, you only charge the VAT from the member states where you are established. So this is just a summary in a nutshell of the distance selling rules, but these will no longer apply between the UK and the EU. As we said as well, Amazon will no longer send your stock from the UK into their EU fulfillment centers. That will be your responsibility as a seller to move your own goods, some of your inventory into a fulfillment center in the EU. And actually that would be, so again, if you are considering staying on the Amazon FBA or PANEU programs, moving some of your inventory to a warehouse in mainland Europe, that would actually allow you to hold stock locally and keep using the distance selling rules from that local warehouse. So that could be an interesting option for you. And if you do that, if you move your goods, you would also need to, when you're selling into the EU moving forward, you would also need to decide who you want the importer of record of your goods to be in the EU. We're going to come back to this in a couple of slides, but that's going to be really important for the VAT treatment of your goods. So yeah, think about potentially moving some of your inventory to mainland Europe, but bear in mind that that would trigger a VAT obligation locally. So on this slide, I just wanted to cover some of the options for e-commerce sellers that could be interesting moving forward at the end of the transition period. So let's just go through each of them. So the option number one would be to, as a seller, so the online seller would pay the import VAT when importing the goods into the EU. So typically you will be selling on DDP terms. So with this first option, the online seller imports the goods and is responsible for the import VAT and the applicable duty charges. So you've got maximum responsibility in this scenario. This offers a better customer experience for your consumers because they know what they pay upfront. There is no hidden fees, there is no additional charges when they receive their goods, and they know what they're paying for, basically. So that's definitely probably the best customer experience you can offer to your consumers. Again, with this option from the UK into the EU, the distance selling thresholds will not apply because you will ultimately be importing into the EU. So there is no threshold applicable to that. You would need to register for VAT in the country of delivery of your goods from the first supply. So again, no threshold applicable. You account for the VAT and you have to register locally for VAT. If you incur any import VAT, that should be recoverable, which is quite interesting. And then any local supplies can be reported and accounted for in your local VAT return. Another important point, and we will come back to this in a few slides as well, is if you are opting for this option, you would need an EORI number, an EU EORI number. So you might already have a GB EORI number, but that will not be sufficient to be importing into the EU. You would need to pick to obtain an EORI number. We'll come back to this in a few slides. Moving on to the second option is making your customer pay for the import VAT. That could be selling on DAP, for example. So by doing this, you are making your customer responsible for importing and for paying the VAT and import duties, for example. So again, that could be with business customers, but also with consumers. So that's probably the least burdensome option for you as a trader, because basically, yes, you are making the buyer responsible. So it's probably in terms of paperwork and additional requirements, is probably the easiest option for you. However, it's probably not the best in terms of customer experience. Your consumers might will likely experience some additional charges in terms of, when they receive their goods at their or when they are collecting the goods from a parcel operator or freight forwarder, they will face additional charges, and no one really likes that. So that's probably not the best option, but if it makes sense for you, that's one you could explore. One interesting point is that in the EU, there is a low value consignment relief, which will be in place until the 1st of July 2021. And this is 22 euros. So that means that when importing into the EU at the moment, if you are importing goods in consignment up to the value of 22 euros, you are not charging VAT on such goods. This will be scrapped from July next year, but at the moment it's still in place. So that's one thing to bear in mind, is that when you are importing to EU, selling to EU consumers, very low value items, VAT is not necessarily applicable, actually. So that's also something to bear in mind. One last thing as well with this option, coming back to the idea of what kind of customer experience you want to give your consumers. One issue that can happen is the burden of your customers having to, or the lengthy process, if they ever want to return the goods for any reason, is for them, it will be a bit of a struggle to get their VAT back. And that's, again, something to bear in mind. It wouldn't be a really pleasant customer experience if you somehow want to return the goods to the business, but have to separately go through the hassle of getting the VAT that they have paid back. It might not really be easy. So that's something to bear in mind. The last option will be, and we've covered this just before, would be to move your stock from the UK, for example, to move some of your inventory into the EU and holding stock locally. So it could be a really interesting one if it makes sense for your, in terms of the type of customers you have. If it makes sense for you as a business, then it might make sense to open a warehouse or to just move goods into fulfillment centers in the EU. And that means that basically you would be making deliveries in the EU from this local warehouse. That could be great because it means that your goods, which are being shipped from the EU into other member states, would remain subject to the distance selling rules that we mentioned a few minutes ago. So that could be a really interesting example, even in terms of delivery times as well. It would probably be quicker to get your goods delivered to your customers as well. So that's probably a good one. But it means that you would need to keep local VAT registrations. And that means additional VAT reporting, and also customs procedures when you're moving your goods from the UK into the EU as well. So that's also something to bear in mind. Yeah, just to have a look in practice, in practice, how would that work for a US-based business, for example? So as a US-based business, if you're currently shipping all your goods from a UK warehouse into the EU, let's have a look at these three options. So first option, you would continue to ship from the UK. You could make your customers the importer of record, and they would be paying for the VAT. And that means that you would not have any additional VAT obligations. So as a business, that would be quite interesting, but not necessarily for your customers. The option number two, again, if you decide to continue to ship from the UK into the EU, you could be choosing to make yourself the importer of record of your goods. And in that case, you would have to register where in the country where you are importing your goods. You would need to follow the local VAT rates applicable in the country of delivery, and you could reclaim any import VAT in your local VAT return. And the last option would be, again, as we've just mentioned, moving your goods from the UK into a warehouse in the EU. You would need to keep a local VAT registration where you hold your stock. So this is a requirement. It's currently a requirement in the EU, and it will remain a requirement moving forward. If you hold stock in the EU, you need to VAT register locally. So that would be the case with this option. And then you could benefit from the distance selling threshold simplifications with stock in the EU. But bear in mind that in some EU countries, fiscal representation could be required. So that depends from one country to another, but it's definitely something that you should consider as well in terms of potential additional costs, for example. We'll come back to this in a few slides. Actually, just now. So will you need a fiscal representative? One of the first questions you should be asking yourself as well, one of the many questions to ask yourself, actually. So as we've just said, in many EU member states, so in many EU countries, non-EU businesses are required to appoint a fiscal representative. This fiscal representative is different than just an agent who might be filing your VAT returns, for example. It's different. The fiscal representative is jointly and severally liable for your VAT obligations. The requirements are different from one member state to another. So I just wanted to raise a couple of examples just to illustrate how different it can be. For example, when it comes to UK businesses, we've got Belgium, who has highlighted that UK businesses would need to appoint a fiscal representative in Belgium if they want to carry on trading in the country. So that's one extreme. And then if we move to another extreme, France, for example, they have made clear that although they usually require non-EU businesses to appoint a fiscal representative, France has mentioned that they will not require UK businesses to have a fiscal rep in France, for example. So it's just to illustrate the major differences from one member state to another. So I would say that's definitely something you need to anticipate on if you're thinking about continuing to trade in the EU. Review the fiscal representative requirements in each member state just to make sure you don't face any issues in the future. And why is that? Basically, a lot of tax authorities in the EU want a local and established business to take on the VAT liability on behalf of foreign sellers. And that's because they want somebody local to contact in case of issues, or not necessarily issues, but yeah, to have somebody local they can contact easily. So just to conclude on this slide, please bear in mind that fiscal representative can mean additional cost for your business. usually their fees, their service fees can be higher, and that is because, of course, they are bearing more responsibility. So that can reflect in their fees. Some member states require a bank guarantee as well. So that can be a bank guarantee from a bank, but that can be also a cash deposit in certain cases. That's also something to think about. And it's usually calculated as an estimation of your turnover, of your yearly turnover. So that's something to bear in mind as well. All of this can mean additional cost, which could be reflected in your pricing, for example. So definitely something to anticipate for the future. A really interesting one in the UK. So again, something else to think about for the end of the transition period. The abolition of the low value consignment relief in the UK. So we touched on that a couple of minutes ago, where I mentioned that the EU had a low value consignment relief of 22 euros. The UK has a similar measure in place. So currently, the low value consignment relief in the UK is £15. And what it means is that at the moment, goods valued up to £15 or less are relieved from VAT when they are being imported into the UK. So it's really important. So it means that if you are importing goods up to £15 in the UK, these are imported VAT exempt. There's no VAT due. However, the UK has confirmed that they will be scrapping this measure from the 1st of January 2021. Why? Well, basically, it's to create a level playing field for UK businesses, so UK domestic businesses and overseas businesses, because with the rise of e-commerce and online marketplaces, governments have come to realize that these low-value consignment reliefs are actually creating unfair competition for domestic businesses who have to charge VAT and foreign businesses who don't necessarily charge VAT on low-value consignment relief. And also, historically, it's sometimes led to fraud as well. For example, you would see parcels mislabeled or with the value estimated on purpose, just so that the goods could come into the UK or into the EU, import VAT with no import VAT due. So that's being scrapped from the 1st of January 2021, and it is replaced by a new measure, which will come into place again from the 1st of January. So instead of the low-value consignment relief, the following measures will come into place. Goods imported in consignment with a value up to £135, the taxable point will be moved from the point of import to the point of sale. So that means that at the moment, goods imported are usually, the VAT is usually due upon import, but with this new measure, when importing goods in consignments with a value up to £135, you will need to charge VAT at the point of sale rather than at the border. So what that means is that you will definitely have to keep an eye on the value of the consignments you are imported into the UK, because that will change the VAT treatment of the consignments. So just to illustrate these changes, so again, these are for goods, overseas goods sold in the UK. So as I was just saying, if you look at the first arrow, if you look at what happens in the case of consignments being imported with a value up to £135. And I just want to highlight that when we say consignments, we don't talk about individual items, but we talk about items sold in a parcel, if that makes sense. So it's not the value of individual items, but it's items sold in a parcel, in a consignment. So that's been made clear by HMRC. So what happens in this case? So when you are importing consignments with a value of up to £135 from the 1st of January 2021, import VAT will no longer be due at the border. Instead, you should be charging and collecting VAT from your consumers at the time of the sale. The £145 is basically the amount under which there is no custom duty liabilities. It's the UK custom duty liability threshold. So that's why they chose this value. In such case, you would be charging UK supply VAT rather than import VAT. That makes sense. And you would typically deliver DDP and register locally for VAT in the UK. So again, registering locally, charging VAT at the point of sale, and then accounting for VAT in your GB VAT return. Really important point as well is as part of the changes happening, HMRC has confirmed that if you are selling consignments, so goods in consignment with a value up to £135, if you are selling these through a marketplace, the responsibility to charge and collect and account for the VAT will shift from the seller, from the seller to the online marketplace. So that's a really important change that's going to happen as well. So bear in mind that if you are selling on a marketplace into the UK, goods and consignments up to £145, the responsibility to account for this VAT will be shifted from you as a seller to the online marketplace. And in such case, you wouldn't need a VAT registration potentially. We'll come back to this in a bit as well. And what happens to consignments with a value higher than £135? Well, in that case, VAT will be due at the time of import, so at the border. There would be custom duty due as well, because again, this will be above the threshold. And in that case, we would be talking about import VAT rather than UK supply VAT. I just want to come back a little bit on these big changes for goods sold into the UK from overseas. So as we were just saying, as an overseas seller, if you are selling on a marketplace, you will no longer be liable to collect the VAT at the point of sale in certain cases. Instead, the marketplace would be responsible to collect the VAT on your behalf. What happens if you are using a UK fulfillment center? So if you're holding stock in the UK, that's a little bit different, because in that case you would need to keep your VAT registration in the UK because you are holding stock in the country ultimately. So if you are holding stock in a fulfillment center, keep your VAT registration. You could reclaim any import VAT on your VAT return. And then the sales made on the marketplace would be exempt from VAT. You would be selling your goods through the marketplace VAT exempt, but you would need to report that in your VAT return. In another scenario, if you are drop shipping to UK customers from overseas, and again, as we've just said, consignments with a value up to £135, you would need to charge the VAT at the point of sale. Really important point here. If you are drop shipping goods in consignment over £135, your goods will go through the normal customs procedures. One thing to bear in mind here is who is the importer of record for your goods. Again, that would change the VAT treatment as well, and that would change the person ultimately responsible for accounting for the VAT. And that could change as well, whether you need a VAT registration or not. So really important to bear in mind. Okay, moving on to selling on your own website. If you are selling on your own website, VAT registration would be required. You would be importing into the UK when selling from overseas. So again, if VAT would have to be charged at the point of sale for goods if they are sold from a UK warehouse, or if they are coming from outside the UK with a value up to £135, and there will be no threshold to exceed because you will be importing basically. And this is something to bear in mind as well when you are selling into the EU. No threshold VAT would be due from the first sale as well in the country of arrival of your goods. VAT recovery. Again, that's another big change for UK businesses ahead of the end of the transition period of Brexit. So with that recovery, so currently any VAT incurred in another member state can be recovered thanks to the EU refund claim system. So currently as a UK business, you can reclaim any VAT incurred in another member state directly through the EU system. And it's a much easier process. You only have to make the request to your member state of establishment. So again, as a UK business, that would be to HMRC. As a French business, that would be to the French authorities. You make the request electronically, and then they do the rest of the work on your behalf, provided you have submitted all the required information. A major change for UK businesses is that moving forward, after the end of the transition period, the UK will no longer be considered a member state of the EU for VAT purposes, and therefore they will have to go through the 13th directive to reclaim any VAT. So this is a directive which is already in place for non-EU businesses. It's basically a different process. It can be more timely. It's less straightforward. Unfortunately, there is more paperwork required. Usually you have to provide all your original invoices. And there is also an issue with some countries in terms of reciprocal rights. So what does that mean? It means that basically both countries have to have reciprocity in place in terms of recovery claims. For example, I believe, just to give you an example, that Spain does not allow US businesses to reclaim any VAT because the US doesn't do this for Spanish businesses, for example. So this is just to give you an example. So it's definitely something that we would need to keep an eye on. There's not a lot of information at the moment in terms of whether the UK will be. We can imagine that they will implement reciprocal rights with the rest of the EU. We don't really know that yet, but we can imagine that they will, but they might not. So that's something we're keeping an eye on. But basically, what does that mean for you is that if you know you will have some VAT to reclaim in the EU after the end of the transition period, make sure you anticipate that and make sure you speak to an expert because they can help you through the process. And another major change is that the claims have to be made directly with the member states where you incur the VAT. So that's another change. At the moment, as I was saying, you would make the claim with, for example, HMRC if you are established in the UK. Moving forward, you would need to make the claim directly with the local member state. And that can be, as you can imagine, quite complex with the language barrier and things like that. So definitely speak to an expert if you have concerns about that. Okay, so if we have a look at a few tips that, again, you need to think about before moving goods across the border at the end of the transition period. So we put together a checklist with some of the major things that you need to bear in mind. So if we start with the first one would be apply for an EORI number. So we mentioned that earlier. If you were listening to the presentation yesterday, we also spoke about EORI numbers. It's a big one. You might already have a GB number, but you will not be able to use your GB number to import into the EU. You will need to ask for a secondary EORI number. And usually this is in the first point of entry of your goods. So where you import your goods, that would be usually where you would need to apply for an EORI number. So again, this is something that at simplyvat.com we can help you with. So if you have concerns, feel free to contact us, and we can help you with that. Secondly, make sure you've got the right certificates and authorizations before moving goods into the EU. Really important. As we were saying earlier, at the moment, the UK is part of the single market and customs union. Moving forward, there might be some additional certificates and authorizations needed to move goods, certain goods across the border. Make sure you've got these in place before moving your goods if you are trading specific items or controlled items, for example. Review your supply chain. Yeah, really important. Review the supply chain. VAT will affect each stage, so make sure you know what you're doing. And again, check the VAT implications at each step of your supply chain. Where are your goods flowing? Each step is important, so make sure you know the consequences of moving goods, of holding stock, etc. Review that, and again, if you have concerns, speak to an expert. Speak to an expert, but also to your partners. So every partner you have involved in your supply chain, that can be your freight forwarders, that can be your parcel operators. Make sure that you speak to them. Make sure that they are ready for the end of the transition period. Make sure that they have the right certificates and authorizations as well. So you might be ready as a trader, but perhaps your partners aren't. So make sure you communicate and that they have the right information from you as well. And again, really important when trading with with an EU business, make sure that it's clear who the importer of record will be, etc. Make sure it's all clear and that you communicate extensively on that. Tariffs. Again, yesterday we covered that quite a lot with Kevin, but basically, moving forward, you will be expected to determine what tariffs will apply to your goods. And you can do this by, according to the commodity codes of your goods. You will need to know the commodity codes of your goods when moving them across the border. And there will be two essential tools for that. So from the 1st of January 2021, the UK will be referring to the UK Global Tariffs tool, which will be applicable from January. So you will need to look at that one when importing goods into the UK. But when moving goods into the EU, and in order to check the applicable tariffs in the EU, you will need to keep checking the EU tool. Really important as well. Determining the value and the origin of your goods for custom declaration purposes. Again, as a trader, you will be expected to determine the value of your goods and the origin. It can be quite complex, specifically the origin. So this is something that you should, if you have concern, if you're unsure, you should speak to an expert as well for that, because it's quite, the tax authorities will basically be quite thorough with this. So you will be expected to know that, but also determining the value of your goods for your custom declarations as well. Number 8, apply for a deferment account or for postponed accounting if it is available. Yeah, think about your cash flow basically. Some countries will be offering deferment accounts. Some countries are already offering deferment accounts when importing. So that could be really interesting as well, because it means you could account for the import VAT later on. And that could be really interesting for your cash flow as well. The UK will be implementing a postponed VAT accounting for VAT registered businesses, for example. So typically it means that instead of paying the VAT at the border, you will pay it in your VAT return. So just making it a much more pleasant experience for your cash flow. And number 9, plan for delays. There will be, plan for delays. Just make sure you expect delays when moving goods across the border. The customs officials and logistic officials have shared concerns about this. with IT systems not necessarily being ready with the government, and with the additional custom declarations required and the additional checks and controls taking place between the UK and EU border, you should be expecting delays at the border. So make sure you consider that. And again, in terms of customer experience, make sure you consider that for your customers. Keeping records of your movement of goods. And lastly, don't forget about interest stats. Interest stat declarations, these will actually still be required in the UK. That has been confirmed by HMRC. So don't forget about interest stats. They are an additional requirement in addition to your current VAT return and the custom declarations that will be required interest stat. Bear that in mind. And if you have any questions on that, you can always speak to us, speak to an expert, and they will be able to help you. Because for imports, again, you might already have one, a GB ERE number, but you will need that in the EU as well. So ERE number is required on import documents, and it is required if you want to reclaim import VAT on your VAT return. For example, you need a GB ERE number when you are importing into GB, but you need an EU number if you are importing into the EU. So that's why you will need a secondary ERE number moving forward if you are planning to import into the EU. So if you're established into the EU, your ERE number will typically be granted to you by your member state of establishment. However, if you are not established into the EU, your ERE number will be granted in the first EU port of entry of your goods. That's the general rule about that. So again, if you don't know where to start with ERE numbers, we offer support at simplyvat.com. So feel free to get in touch and we can help you with that. Okay, digital services. So another major change actually with the supply of digital services to consumers in the EU moving forward after the end of the transition period. You might already be familiar with the mini one-stop shop. The VAT Mini One-Stop Shop, it's currently an optional scheme, and it basically allows you as a trader to account for VAT in a single member state instead of registering locally in every single member state where you supply digital services. What is covered by digital services? Typically, telecommunication, broadcasting, electronic online services such as website supply, software, digital patterns, knitting patterns, for example, distance teaching, music streaming, etc. So with the Mini One-Stop Shop, you register in a single country and you file your VAT returns for all member states of consumption in one single country. What's changing with Brexit is that as a UK business, if you are currently using the Mini One-Stop Shop, you will have to deregister from the union scheme and register in another member state on what we call the non-union scheme. Again, any questions on that, feel free to contact us. But yeah, basically the union scheme is for EU businesses or with businesses with an establishment into the EU. As a UK business, you will need to deregister and then come onto the non-union scheme from January. The Northern Ireland Protocol. So again, you might have heard of this one, Northern Ireland Protocol. It's a solution that's been agreed between the UK and the EU to avoid a hard border between Northern Ireland and the Republic of Ireland. I'm going to try to move as quickly as I can on that one because it's been already 15 minutes. So I'm going to try to move on so that we have time for questions. But basically, what you need to know about the Northern Ireland Protocol. I was saying earlier, Northern Ireland is an exception to in the Brexit saga. What you need to remember about Northern Ireland is that ultimately for goods, only for goods, not services, but Northern Ireland will remain subject to EU VAT law for goods only after the end of the transition period. So basically, what does that mean? It means that if you are moving goods between Northern Ireland and the rest of the EU, these will be considered as intra-community movement of goods. Distance selling threshold will still apply. There will be no custom procedures, no imports. There will be, it's kind of as if Northern Ireland would remain as a member state, basically. So there's no changes in respect of goods after the end of the transition period. However, that means that movement of goods between Northern Ireland and the rest of the UK will be treated as import and export. So if you're moving goods, I'm just going to show you, and feel free to take a screenshot of this as well. But it's basically just the VAT treatment of goods moving between Great Britain and Northern Ireland and the EU as well. So feel free to take a screenshot of this, but it's basically just to illustrate that the movement of goods between the EU and Northern Ireland will not change. They will remain treated as intra-community supplies, whereas movement of goods between Northern Ireland and Great Britain will be treated as export and imports. So that's a major change as well. Okay, some frequently asked questions, and then we will take a few questions as well that you've submitted. Okay, so the first one, will UK e-commerce sellers be able to mitigate the impact of Brexit by holding stock in an EU member state, in Germany, for example? So absolutely. Basically, holding stock in the EU will mean that you will be still subject to the EU VAT rules. So it's really an interesting option as an e-commerce seller to explore. That will mean that your goods will be taxed in Germany with German VAT until you cross a distance selling threshold in another member state of destination. So really interesting option for an e-commerce seller to mitigate the impact of Brexit. And that means you would continue to monitor the distance selling threshold in the country of arrival of your goods, so where your customers are based in the EU. Another really frequently asked questions. So again, will you still need to monitor the distance selling thresholds in the EU after the end of the transition period? The question is, yes, if your goods are dispatched from another EU member state. So this is what we've just said with Germany. If you hold stock, you will still be expected to monitor the distance selling thresholds where your goods are sent to another member state. So the question is yes, if you hold stock in the EU, and the answer is no, if your goods are dispatched from the UK and imported into the EU. So basically selling from the UK and selling directly to customers in the EU, there is no threshold, and import VAT is due from the first sale in the country of arrival. Will import VAT be due from the first sale? Yes, in the UK, as we said earlier, the low value consignment relief is being scrapped from the 1st of January 2021. This is to create a level playing field for local businesses facing unfair competition against overseas businesses. There is the postponed VAT accounting available for UK VAT registered businesses, where they can account for VAT on their VAT return instead of at the border. So really interesting one. And then yes, in the EU, because the low value consignment relief is only being scrapped from July next year. Okay, so that is it for me. We're going to be covering a few questions now with Alex. Hi, Alex. Sorry. Bit longer.
Thank you so much. No, that was so useful, and we have some questions coming through. So I know we're edging up to about an hour. However, if we'll go through as many questions as we can, even if we go over an hour, because everything will be recorded and distributed after. So let's kick off with our first question. So Second Nature Online, I think they were trying to say the LVCR, the low value consignment relief threshold, include postage cost?
That's a really interesting question, actually. From my understanding, this only includes the value of the goods in the parcel. So I'm not sure it includes postage costs, actually. Is that your understanding as well?
Yeah, it doesn't include postage costs. It doesn't include package or insurance. So it should just be the value of the goods sold. Okay, so our next question is, we sell online on Amazon and are in the Pan-EU program. So while we are not based in the UK, we have a UK VAT number. Next year, when selling to UK customers from Spain, do we need to have a UK EORI number too?
Oh yeah, really interesting one as well. So let me just read that again. So we said on Amazon, we are a Pan-EU program. So as we are not based in the UK, we have, you have a UK VAT number. Next year, selling to you. Yeah, absolutely. So ultimately, you would be importing from Spain. If I understand, you would be importing into the UK, and you would definitely need a GB EORI number. So if I were you, I would probably make the request as soon as possible, because the tax authorities are going to be swamped, not sure that's correct, but are going to be really busy with applications. So if you can anticipate on that, make sure you apply as soon as possible for a GBORI number.
Perfect. And Corey here, is there a good link for fiscal representative requirements for all countries in the EU?
Yeah.
I would say that if you needed help with fiscal representation, you can get in contact with our team. We will be able to help. I'm just going to pop our email up on the screen there. So if you need assistance with fiscal representation, we work with local agents that can help assist you with that. So to keep everything kind of all in one space. So if you do have those questions, contact our team on that email listed up there. Okay, so our next question from Sarah: are supply VAT rates and import VAT rates typically the same value, and therefore the major difference would be the timing of payment?
Yeah, really interesting. Really interesting question as well. Really important one. So yes, they are. So when you are importing, for example, in the EU, you would need to apply the local rates of the country. So you need to check that. Some countries actually differ, if I'm correct, some countries differ to the standard rate when importing. But that's definitely something that I would say check beforehand, because again, as you might know, VAT rates can be really different from one member state to another. So yeah.
Yeah. So ultimately they are the same, but it will just be the value that you are, paying them at. So the value that you're importing your goods at is going to be smaller than the value that you're selling them at. So that's where on your VAT return, when you offset the VAT from your import VAT from your sales VAT, typically you're going to still be paying over to the tax authority during that time. So I have another question here from Shibu, and they have said, if I am drop shipping from China to the UK, what are the VAT regulations, please? And I did question this a bit further and said, what are you selling on? And I got a response saying, I'm selling on my own website. So after Brexit, Louise, what are their requirements importing into the UK?
Again, really interesting one. So if you are selling on your own website, I would say the value of so you would need a VAT registration. If you did you say you have a VAT registration already?
They didn't say that they had one. They just said that they're selling on their own website. So
Okay. So in that case, the value, there's no VAT registration threshold. The value of your goods isn't necessarily relevant, because you would need to pay VAT, but you would need to, the point of sale the tax point will be important, because basically if you are selling goods in consignments with a value up to £135, you would need to charge that at the point of sale, if that makes sense. Whereas if you are selling goods into the UK with a value up to above £135, you would have to go through the normal VAT and customs procedure. But if you are locally registered in the UK, you would be able to benefit from the postponed VAT accounting, for example. But again, bear in mind that there is no threshold if you are drop shipping, and if you are the importer of record of the goods, you would need a local VAT registration regardless, if that makes sense. I hope that answers the question.
I think so. And just to clarify, can you clarify what that £135 threshold includes? Is it based on the parcel or is it on the consignment?
No, again, really important to bear in mind that so HMRC was really clear that the value, the £135 value, refers to not individual items, but a parcel with the bundled items ultimately. So that can I know that can be a bit tricky in practice. That's something that perhaps they haven't really thought through. If you're selling, it's not always easy, but that's something you're going to have to determine and look and keep an eye on, because they're really clear that it's the overall value of your parcel, not an individual item. That makes sense.
Perfect. Yeah, thank you. Okay, so Sophie here has asked, as a UK registered business, if, and I don't know, this doesn't say UK VAT registered business, it just says UK registered. Okay. If your product is produced in the EU, held in a warehouse in a factory within the EU, and you are selling in the EU countries, are you required to pay any VAT in the UK as a UK business?
So if you are, I feel like there's two different things here. If you are a UK VAT registered business, of course you should be filing VAT returns in the UK. If you are UK established business, you might be below the threshold of the UK VAT threshold. So perhaps you're not filing VAT returns in the UK. However, if you are, so from what I understand, you're producing into the EU, you're holding stock into the EU, so you will be filing local VAT returns in the EU where your goods is held. So and then you're selling from the EU into the EU. So from what I understand, you would just be charging EU VAT on those goods specifically. So I feel like this is a bit two different topics. If your goods are held into the EU, sold into the EU from the EU, EU VAT is due, and really hasn't got anything to do with UK. That could be different if you are not holding stock, but if you are holding stock, EU VAT, local VAT is due. That's really something to kind of flag for businesses.
Yeah, I think one important thing to note is that you still have to pay your corporation tax in the UK. Yeah. So that's still going to be applicable to you, but the VAT side of things, that's where it probably, you wouldn't have to be paying any taxes there. Thanks, Sophie, for that. So Second Nature Online has asked another question here. When sending goods to pan-EU, at what point is import VAT payable? Because stock may be stored without ever actually selling.
Yeah, so again, that's another interesting change is that unfortunately, from my understanding, and correct me, Alex, if I'm wrong, but with the end of the transition period, unfortunately, when moving goods across the border, import VAT and custom procedures will be due regardless. So the current kind of simplifications we have in the EU when moving stuff from one member state to another without a change of ownership, for example, this will no longer apply with the UK, and import procedures, import VAT will be due, unfortunately, from for what I understand.
Yeah, absolutely. Yeah, and so you'll be paying kind of two times if you're set up your supply chains going into the UK and into mainland Europe. You're going to be paying import VAT at each port of entry, and then even if your goods aren't selling from that point, you still need to pay your import taxes at that point, unless that country has a deferment scheme and you're part of it. So that's something to note there.
Yeah, and you should be able to, sorry, Alex, and you should be able to recover the import VAT as well, that the import VAT that you incur when moving your goods across the border, you should be able to recover that in your local VAT return.
Yes, yeah. Okay, and so Jane here says, if we are supplying goods to a customer in France, do we as a company need an EU EORI number?
Well, again, that depends on what terms you are supplying the goods. So it depends, on what term you are supplying the goods, on what Incoterms you are choosing. So let's say if it's a private individual, if you're importing, again, you would need a local EORI number for the custom declarations in the EU. So if you are the importer of record and you are importing the goods, selling them to consumers in France, and if France is your first point of entry, you would need to get a French EORI number and then put that in your custom declarations as well. That's EORI numbers are requirements in your custom declarations. And that's also the case in France, as far as I'm aware. So that's my, I would say, yeah.
Perfect.
Do you have anything to add, Alex?
No, I think that's great. Adam here has asked, if we are planning on sending all pan-EU FBA stock to Germany, do we need an EORI for Germany or France, the more likely port of entry into the EU from the UK?
Yeah. Yes. Again, the European Commission guidance, so from the European directive, the guidance is that as a non-EU business, you should be applying for an EORI number in your first port of entry of your goods. So if that is going to be Germany, you should apply in Germany.
Perfect. Now I have one more question here, but I'm not sure of the abbreviations. So I don't know if you might know the answer to this, but a UK VAT registered company got an order in Amazon France, I'm assuming. Item purchased outside from the EU and asked the suppliers to ship the item directly to Amazon French customer. What invoice should be issued before and after Brexit?
Sorry, so a UK version got an order in. So Amazon France.
So I guess the main question is what?
So I think, so if you are a UK VAT registered business, and if you're not registered, so the item, so I understand that there would be no stock in France. Obviously, you would just have your stock, coming from outside the EU. So I think you would currently be invoicing with your, Sorry, I'm just going to read that again to make sure I get it completely. So item is purchased from outside the EU, so it's imported, okay? You're shipping directly from the EU. So you're basically importing from, before, after Brexit, you're still, ultimately you're importing the goods. So my understanding is that French VAT should be due when you're importing. Mm-hmm. So you should be charging French VAT, whether it's before or after Brexit, if you're importing. When importing goods into the EU, you should be charging you should follow the local VAT rules and charging local VAT. That's my understanding. But yeah, what do you think, Alex?
Yeah, absolutely. I think you're importing from outside the EU, inside the EU, definitely. If you're the importer of record, which Amazon typically likes businesses or the seller to be the importer of record because it gives the customer a better experience. In that case, absolutely. You would be needing a VAT registration in France. And then once you're VAT registered, you are going to be charging VAT at the point of sale. And you're going to be charged import VAT on your goods when they enter into France. What you'll do is you'll get your EORI number, put it on in the import documents, and then you can reclaim the import VAT on your VAT return. And you will be charging and collecting that VAT at the point of sale passing that over to the tax authorities. So yeah, I think we got to the bottom of the question there. So thank you. And I think this is a really good question here. As a pan-EU seller, do I have to get an EORI number in all pan-EU countries?
No, yeah, really good one. Again, one of these major changes going on with Brexit. No, you don't. And actually, really interestingly, you can only have one European EORI number. You cannot have several EORI numbers. At the moment, one exception is actually the UK, where the UK has never, they don't recognize EORI numbers from another EU member state. So that's why you might already have a GB number, but with the rest of the EU, you can only have a single EORI number. So you don't have to worry about applying in every single member state. One is enough. So that's one good news.
Perfect. And now we have a few questions coming in. There people are sourcing from Europe, Louise. They're sourcing from Europe, and they're selling within Europe. Where do they need to get their EORI numbers? Do they need an EORI number? What happens in this case if they're sourcing from Europe?
So do you mean from Europe and then selling? Oh, if I source from the EU, Italy, and sell in Germany, which EORI number will I need? Well, if I understand that you're sourcing from Italy, you're already into the EU, and then you're selling to Germany, you're not importing or you're not exporting. So actually, in that case, you shouldn't need an EORI number to proceed. So that's not something you should be worrying about.
Yeah, I think the big thing to put across is EORI numbers are for importing. They recognize you as importer. So you don't actually need an EORI number unless you are importing your goods and you want to reclaim your import VAT. So that seems to be all the questions, and I know we have gone over time. So thank you so much to Louise for joining us today. Again, we still have 2 more days of Brexit Bootcamp, and you can sign up through the links below the YouTube video in the description. If you have any questions about VAT, getting VAT registered, or what could happen to your business, you want to have a talk with our team to discuss your options, you can email the link here on the screen. And otherwise, thank you all so much for engaging and asking your questions and holding on to the end here. And I will hopefully see you tomorrow at 3 p.m. For our exporting into new market session. So thank you all so much, and I will speak to you very soon.
Thank you, Alex.
Thanks.